On Thursday, oil exceeded $89 per barrel but failed to consolidate above this level. However, after statistics on crude inventories in the US were released, the quotes rushed down. Contrary to expectations and the previous negative report, fresh data showed that crude stockpiles rose by 515,000 barrels to 413.81 million barrels last week. In addition, a decline in oil prices was triggered by a steep drop in stock indices. It's difficult to say what exactly played a decisive role. What's clear is that speculative moves have a major impact on the quotes. On the one hand, this could drag oil down to $80 per barrel. On the other hand, speculators may continue to drive oil prices to record highs. On Thursday, Brent crude oil futures came close to the level of $90 per barrel, but then pulled back by about 3.5%. The benchmark is currently recovering. Given the speculative hype in the market, a decrease in oil prices will increase the investment attractiveness of the trading instrument. Although the asset is highly overbought, it has every chance of extending gains if the price consolidates above $90 per barrel on the daily chart. In this case, Brent crude may well reach the psychological level of $100 per barrel. Meanwhile, the situation in the foreign exchange market remains unchanged. Traders seem to have put up with the excitement surrounding security talks between Russia and the US. Although the news calendar is full of various reports, the dollar versus ruble pair has been drifting within the sideways range of 76 and 77 rubles per dollar for the fifth consecutive day. Moreover, the phase of consolidation will most likely continue until the geopolitical situation changes significantly. From a technical point of view, the dollar-ruble pair continues to move within the sideways range of 75.60 and 77 rubles per dollar. Such a prolonged flat movement could lead to new speculative fluctuations. In this situation, it would be a wise decision to use a breakout trading strategy. If the price consolidates above 77.35 rubles per dollar, the ruble will extend losses. In case the price fixes below 75.55, the Russian currency will most likely gain value. Earlier, the precious metal managed to break above the sideways channel and head for the level of $1,840 per troy ounce. However, its winning streak was too short-lived, and the price went down to the $1,830 mark again. Such a decline in the asset can be attributed to the steep drop in the stock market. Stock indices are suffering losses amid expectations of the Fed's decision to tighten monetary policy. This means that gold is losing its safe haven status. Indeed, in such situations, investors often rush away from riskier assets and opt for stable ones, but gold appears to no longer be stable. Nevertheless, it's too early to predict a serious fall in the value of the metal. Thus, after breaking through the resistance level of $1,830 per troy ounce, the metals rally slowed down. Gold futures stalled at the level of $1,840. If the price consolidates above the level of $1,850 per ounce, gold will most likely resume its upward movement. Otherwise, it may return to the resistance level of $1,830. And well, that's it. Please watch our video reviews to keep up with the latest forecasts and news, and may your trading be lucrative. See you back soon.